Dan Frio here, the Mortgage Update. Today is March 25th, 2020. So let's get at it. Today's news, as it's been every day for the past 2 weeks, is the coronavirus. And here's my take on this. Be careful when it comes to your stocks and your mortgages. And that's what the whole channel is about. We focus on basically mortgages here and mortgage rates. So I know it's not a huge audience out there, but realtors, financial planners, mortgage people, those in the market to buy or refinance, I get a huge audience of those people, and that's what we're talking about here. So I try to give, I'm a mortgage advisor, have been for 32 years, but I also try to give you, what's causing this to cause that affects this. So the coronavirus is the biggest thing right now. Once this subsides, I feel we're going to have a big, fast uptick in the economy, okay? So you can see that in the last 2 days, basically from the stock market. What's the stock market doing? Well, look at this. Is this going to be a bottom? It might, because as soon as the news comes out and starts giving us the numbers are starting to go down, and this is subsiding, it's going to be my prediction, it's going to be a fast pace, maybe not to where we were, but we're going to get in those areas again because, this is playing havoc on the world, but it's a hiccup. It's not like an economic catastrophe that we had back in 8, 9, and 10 when it was an investment. Housing and everything was way overblown. And back in 2000, it was the techie bubble that we hit. This is a virus that hit that's causing this downturn. So as you guys know, so my thought is, as soon as this subsides, it's not going to take us 8 years to get out of a recession. It's going to just get everybody back to work. And once everybody gets back to work, consumption is going to be back. And then everything is just going to start to snowball fast. So that being said, watch or get with your financial advisor and see if they might think this is the time to jump back in if you got out during this time frame. If you didn't, we might have hit a bottom here. And again, all we need is a couple reports saying that the virus is starting to subside, and you're going to see the market take off. That's why I don't know if I'm completely behind the bill to spend possibly $6 trillion to help people get through a month or two of this virus. I'm not running for Congress, so I'm not going to give you my prediction there. I think there might be better money served some different variations of different ways. So that being said, the government is out there trying to pass the $2 trillion, and I even heard reports of $6 trillion. So let's throw that out the door right now. One thing that was kind of scary is one of the headlines we just saw was posted this morning. Quicken might be in some trouble. And the biggest thing is a lot of lenders hedge money, and those companies might be facing some big troubles. So what kind of ticks me off on this is, Quicken is the largest company out there in mortgages. And when I read this, emergency funding, why don't they sell their stadium or their race cars that they own or all this other stuff that, they give away homes on Super Bowl and all this other things. You might want to try to be like an average person and save for a rainy day. I'm not trying to be smart about that, but look at some of the CEO compensations. They buy stadiums, they buy race cars, they sponsor this, they do that. Where do they get that money from? You, when you use them. So just remember that next time you think that if it ticks you off that they'll get bailed out, but then next year they'll hit record profits again and everybody's making gazillions of dollars and they're buying another sports team or whatever. Remember that when you go to apply for a mortgage. Just an FYI. So let's get on to why you came here today. The MBSs are down 12. Let's go through the day what happened, because we're basically at the bottom levels right now. And then I'm going to tell you what I'm thinking of the next couple days. Where we're going to be. So mortgage applications we're down 15%. Refinance, we're down 34%. A lot of people are just scared right now. I would contradict this. If you're out there and you're fearing, I don't know what my job's going to do, when I'm going to be back to work. Fannie Mae and Freddie Mac just gave us guidance when we're closing on your loan, and it was actually really good news. As long as we can kind of validate that you're still at the company, we should be fine. Here's where this might play a huge role for you, okay, to kind of get you off the fence, because rates are still, and we'll go over that in a second, like the lowest ever, almost ever, okay? So if you haven't done anything, we had an application today, they called in, they have a 5.5% FHA loan. That's absurd. It's like, and I might have come across a little bit rude. I'm like, where you been for the last 10 years? So, but maybe this idea will get you off the fence. Wonder if you could skip 2 mortgage payments easily and get a lower interest rate and get lower payments going forward. And no, you don't have to default on your mortgage, okay? Look at refinancing, because what we could do is we could refinance you. In almost every case, we can get you a lower rate depending on where you are. I see probably 20 or 30 applications a day, and almost every one of them we're reducing the current rate that the client has, and or they're paying off other debt, which is smart. And I'm not trying to put you in any more debt. My concern is take the debt and structure it financially the best possible way for you, okay? So that being said, we structure your loan so you close maybe the middle of next month. You can skip next month, then the following month, and then your payment will be due the first of the following month after that. You always get a 30-day grace period, and payments always cycle on the 1st. So if we close you on the 5th or 6th, you're going to go 30 days out, and that'll be the next month on the 5th. You can't make a payment on the 5th, it has to be the 1st. So it'll go all the way to the next month on the 1st. So technically you'd skip 2 payments. So that's a good way to do it. I called my mortgage company just for kicks, because I told you guys I was going to start calling a lot of banks and trying to figure out, or mortgage companies, and try to figure out who's doing what for relief. And I'm getting nowhere with it. Everybody is so vague, but I did call my company. And here's what they told me. They could do it, but they couldn't really do it because I'm not delinquent yet. Okay, this is like deja vu back in 2008, 9, and 10. The horror stories that came out was this. Here's what I need you to do. You call in and you say, I need some help. Okay, here's what we need you to do. We need you to skip at least 1 or 2 mortgage payments, and then call us back, and then we'll put you into a program because now you're at default and you're all these other things. Well, the problem that came about was then when you tried to do that relief, now everything stopped working. Meaning, they ask you for your paperwork to show that you're unemployed. You send it in, you wait 2-3 weeks, it comes back, you're asking for a question, if I've been approved. We didn't get anything from you. Oh, we need you to send it again. Okay, you send that. Then you wait 2-3 weeks. Oh, you know what? We need your bank statements or pay stubs to show that you're making less money. So you send that in, and then you wait 2 weeks, you call them, and they're like, we never received that. And then they want your homeowners insurance. This would lag and lag and lag and lag, and then finally they say, you know what, we can't help you out, and they start foreclosure. Don't do that. But that's what my company told me. They said, we can't really do anything, but next month if you don't want to pay, call us the following month, and then we should be able to help you. Don't. Trust me on this one. Don't. I lived it. I've been through it. I had thousands of people calling me, telling me the horror stories. Then I can't refinance you because you're delinquent. You can't refinance a home. Most of the cases you can't finance if you've had a one times over 30 days late on your mortgage. Okay? So please don't go in default. Please don't miss your mortgage payments unless you absolutely have to. But call me. Let's refinance you, pay off some other bills, drive down your payments, skip 2 months, and move forward. I'm not saying this to give you the 2-month reprieve. That could be a huge help, but we want to do the whole package. We want to look at lowering your rate, paying off some other debt if you have it to drive down your monthly expenses. Then let's say you free up $500, $600, $700, $800 a month. Now you get yourself back on track. Now you have some money in savings. Start sending in an extra $200, $300 a month. Pay off the house 3, 4, 5, 6, 7 years early. That's the game plan. Okay, so that's where I want to guide you through. All right, so let's get on to what happened through the market. White House and Senate agreed to a $2 trillion stimulus plan. It'll go to the president's desk to get signed. Durable goods orders, everything is terrible, so we'll skip through that. Relief home pricing index. Actually, home prices increased, believe it or not, 5.2% year over year. That's amazing. But again, that was through January. It's not hitting, those numbers are going to come down some. Maybe not. We're going to have less people buying right now because they're just freaked out. And a lot of people are stuck at home. So I don't see March, April being a lot of buying. June, July, and August is probably going to be nuts. We're probably going to have to hire more people just to keep up with the influx of things. Not like some companies that might be looking for monies from the government to help bail them out. Let's go to the next thing. Let's see what we got here on tap. I won't go through that. I just want to get to the juicy stuff if there is anything. But what I do want to pay attention to, the stock market was up 424. MBSs were down 3. But earlier in the day, we were in positive territory. So I don't know if we're going to see kind of a retrieval back from these levels. Let's see. MBSs were down 3 and so forth. Well, let's get to today's chart. So look, you're going to see, and those that watch me daily, you hear me say the Fibonacci levels. So they're starting to come into play. Let's just look at one piece, the ceiling. Look at this ceiling. It's pretty darn close where numbers are going, hitting and bouncing, hitting and stopping, hitting and stopping. The Fibonacci, midpoint is right in here, and the floor is here. So we should be bouncing in that range. That's a huge range. But I think we're going to be capped here. I don't think, even back when everything started, we never exceeded this lid. We hit the lid here before. This is when the government said they're going to do unlimited buying of mortgage-backed securities, which means they're going to do whatever it takes to keep mortgage rates low. So when they come out with that verbiage, and it hits here, stops, and then hits here and stops, this to me is telling me that's basically as low as we're going to go. Could be wrong. This news could come out even worse. But if I'm looking at this in a financial aspect of things, I'm thinking the stock market is pretty much, at the bottom. Could it go a little bit more? Yes. But can it go up? Absolutely, it's going to go up. So I might be a proponent of jumping in there now. And then on this side of the fence, I am saying lock them. Lock your loans. And I don't know what we're told to do today with the advice from this place, but I'm a proponent of just hanging on, seeing if you can just buy yourself some days on your lock, but otherwise lock in. I don't think they're going to get any better than this. Even if the MBSs, the markets that we follow here, continue to rally, I don't think lenders are going to come back and reduce the rates anymore. So let me recap what we follow on this channel for those that are new to the channel. My name is Dan Frio. I do the mortgage update every day. Basically, I educate you on what the economy is doing that will affect mortgage rates. I know this doesn't help everybody in the world, but if you're watching, there's a reason why you're watching. So we watch this number right here. It's called the mortgage-backed securities. This is a bond that trades that actually is filled with mortgage-backed notes, mortgage notes, and it determines mortgage rates. Okay, so there's two ways to look at this. What this number did it go up or down? Okay, down is bad for us because down, this isn't the rate. This isn't the mortgage rate. This is the price, how much people are paying for that bond. Okay, how bonds work is it's different than stocks. You buy a stock at a certain level and you hope that thing runs up in value. Well, in mortgage-backed securities, you're buying a bond and you're paying, the more you pay for that bond, the lower rate of return that you're going to get. For example, if you have a $100 bond that matures next year and you pay $100 for it, meaning I'll give you $100 and then a year from now you give me my $100 back, my rate of return is 0. Okay? But if I pay $50 for that, if I give you $50 now and at the end of the year you give me $100 back, I just doubled my money. So do you see what I mean? The lower you pay for the bond, the less you pay, the higher the yield, the higher the rate of return, the higher the mortgage payment. And that's why we follow this. So what I try to do is I try to catch trends and tell you or advise you when you should lock. When's a good time? Not only do I do this, I also help people or put people into the correct programs that they should be in. So I'm going to say some programs out there, and if you're a deer in the headlight, that's why you need some help from me. Do you qualify for a home path or home ready program with the 3% down, with low mortgage or first time home buyer rates, with discounted PMI? I probably confused the heck out of 90% of you. Do you need an IRL? If you're out there and you have a VA loan, refinance that thing at lower rates. That's a VA loan, a refinance with a VA loan. How that works is if you have a VA loan now, I don't need an appraisal. I don't need your income. Basically, it's very simple. We just restructure your loan, create a new loan for you at the lower rate, today's rate, and we refinance that for you. There's not a lot of qualifications that are involved. Same thing with an FHA loan. You have an FHA loan, I don't need to do an appraisal. I don't need your income. I just need to pull your credit, get a copy of your mortgage statement, get some other paperwork, have you closed within 2-3 weeks at the lower rate, or we can shorten your term. Let's say we get you a much better rate. And so you're like, Dan, instead of a 30-year term, I'll take a 20. And I did a couple of those today, believe it or not. So that's what I do. So right now the trends are, we're bouncing between these levels. I think we hit our bottom. And that's why I'm locking people now. So if you haven't locked with me, you're probably going to get an alert that I'm locking you, or I'm sitting there, as you guys know, tick by tick by tick watching this. So don't fear, I got your back. So if you'd like some more advice from me, please put some comments down below. I respond to every comment. Give me a call though. I'd love to hear from you. 844-775-LOAN. That's 844-775-5626. Or shoot me an email. It's D for Dan, Frio, Frio, at preferredrate.com. So if you're in the process of getting a mortgage right now, the lender has to give you what's called a loan estimate. Send me that loan estimate. I'll review it, get it back to you within an hour, and I'll tell you what I can or can't do. I had one today. They were getting 3.625 with $1,800 in fees. I was able to do 3.375 with $895 in fees. That's just one of them that we went over. So that's how to get a hold of me. Please give me a thumbs up if you like the video. I greatly appreciate it. Share this out. If you know a realtor that you're interested in or you're working with, share it out to them. You know a loan officer, share it with them. Neighbors, friends, families, anybody that knows in the mortgage process or building a house or buying a house, let me know. I'd love to help. So God bless. I will see you tomorrow, same time, same place, God willing. And be safe, be healthy, take care.